for that. Well, diagnostic companies, that's the bright spot today. We have a couple of updates, brokerage notes as well coming in. Vinny joins us to help us out to tell us why Dr. Lal, Metropolis, both are doing well. Vinny.
Yes, so we have both these stocks today in focus. Let me start with Dr. Lal. We had a brokerage note that came in from Kotak Institutional Equities. They upgraded Dr. Lal to an add from a previous reduced rating that they had. They've gotten a target price of 3,250 rupees per share for Dr. Lal Pathlabs. Now, what are they saying is that the execution has started improving. That started on track for the company, and that is a strategy which they want to follow in terms of improved execution, which is working out well. Other than that, they're expecting gradual improvement in terms of the transition that is taking place in leadership. That will be starting to support the growth in terms of strategies that they're putting in place. Pricing action, that's a key to watch out for, right? We've seen those increased competitions coming in from the online channels and online diagnostic companies and pharma like Tata MG, or even when you look at it in terms of Redcliffe, these are the companies on online and offline channels which are creating some bit of a competition for these companies. So now in terms of pricing strategy, pricing action has been taken across most these online and offline players as well. So that means the gap between the pricing has been reducing, which turns out to be a positive for them. For Dr. Lal, they're expecting a volume growth to see a steady pickup in the suburban areas as well as in terms of the tier 3 and tier 4 cities, which will be supporting Dr. Lal's growth. So yes, keeping an eye out on Dr. Lal. Now moving on to Metropolis Healthcare. Metropolis Healthcare reported its Q3 operational update. Good growth in terms of update, double-digit revenue growth of 11% on a year-on-year basis. Other than that, volume growth has also started seeing an improvement, plus product mix is something that is supporting the growth. B2C revenues have seen a 15% growth. They've spoken about increasing the prices in Q4 FY25 in some of these B2C cities. So yes, keeping an eye out on Metropolis also, indicating that the pricing gap is reducing between these platforms as well as these online channels. So that is an interesting one to watch out for.
Okay.